Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us, thank you for clicking to this. Ensure you like, you comment, share, and subscribe to this channel. Now, want to see a question on economics, the solution to the Neco 2020 that was just written, economics question. Okay, the section A. Section A comprised of two aspects. That is the calculation aspect, okay, in which they will be required to answer one. But in this video, we are going to be answering both of the question, okay. The question said from the screen, you can see it. It said the pie chart below shows a hypothetical age distribution of a population. So we have the pie chart that shows 0 to 17 years children, which is 162 degree. Okay, 18 to 59 years, the active population, which shows the 90 degrees, and 60 years and above is for the old people, which shows 108 degree. Okay, said if the population is 140 million and the retirement age is 60 years, okay, calculate the A, remember figure 1, population of children. Remember figure 2, population of old people. Remember figure 3, active population. Remember figure 4, dependent population. B, discuss 4 economic implications of the above population structure. Okay, so that's the number 1 question which we're about to solve now. Okay, and the number 2 question said, given the demand and supply equation, QD equals 65 minus 4P, QX equals 30 minus 3P, where P is price in Naira, QD is quantity demanded, and QS is quantity supplied. They are saying calculate the A, remember figure 1, equilibrium price. Remember figure 2, equilibrium quantity bought and sold. B, use your answers in AI and AII above. Show graphically the equilibrium point. And C, explain 3 factors that affect supply. Now we have done question relating to demand, okay, that relates to the demand function. If you have not seen that, I'll drop it up here or in my description. So we're going to start from the number 1 question to solve. Okay, now they gave us a pie chart and they said the total population is 140 million. So that's the first thing we should take cognizance of. The total population is 140 million. Okay, and they said the retirement age is 60 years. It said calculates A, the population of children. Population of children. Okay, so now before we can calculate the population of children, we have to check in the pie chart given what is the range. It says 0 to 17 years is children, and they give us the degree, that's 162 degree. Okay, the total of the circle that relates to the degree is 360. So the children's section is 162 as shown there. Okay, so if the population of children is giving us 162 degree divided by the total, okay, or first let's get the accumulation of all the degree of all the section. So for children it is 162 degree. For the active population it is 90, and for the 60 years and above, that's for the old people, it is 108. So when you add everything, it should give us 360. Okay, so now I want to calculate the population of children. Now it will be the degree that was given for children divided by the total, which is 360. Okay, multiplied by the population. This is the total population, that's 140 million. So that's 140 million. Okay, so if we do that, So if we do that, we'll have 162 divided by 360 times 140 million. So we'll have 63 million. Okay, with the 63 million, that's the population of children. Okay, so that's the first one. The second one said population of old people. Population of old people. Population of old people. Now we're going to also check. Old people have a degree of 108. So it will be 108 divided by 360 times 140 million. Okay, so if we do that, it will be it will be 108 divided by 360 times 140 million. So we have 42 million. Okay, that's 42 million. That's the second one. The third one, they said the active population. We should calculate the active population. Now this is the active population, 90 divided by 360 times 140 million over 1. Okay, so in this now we'll have 90 divided by 360 times 140 million. That is 35 million. So that's 35 million is the active population. Okay, so we've gotten the population of each. So the next one said the dependent population. Now, what's the dependent population? Dependent population is that aspect of the total population that can't depend on themselves. They are not independent. They depend on the active population to survive. And this range comprises of the minor, which is from 0 to 17 years, and also those that are of retired age from 60 and above. Remember in the question they said retirement age is 60. So they have the old people section that was given in the question with is 60 years old and above. So the dependent population now is that aspect of the population that depends on the independent population for survival. So what it means is that the dependent population will comprise of the dependent population will comprise of the children plus the old people. The children plus what? The old people. Okay, so now if we check there, the children is 162 in terms of degree, plus the old people is 108. So if we add together 162 plus 108 will give us 270. So if we now check 270 over 360 times 140 million. Remember this, the dependent population. So it will be 270 divided by 360 times 140 million. It is 105 million. Okay, it is 105 million. So the dependent population, which comprises of the children and the old people, is 105 million. So that is what was given. Now they say B, discuss 4 economic implications of the above population structure. Okay, discuss the economic implication of the above population structure. Now, in the above population structure, we've seen that the dependent population is higher than the independent population. And what it means is that those that are active, that are working, because the active population is also more or less the working population. Okay, that's the lifeblood of any nation. So what it means is that that active population is less than the dependent. It means that those that depend on the independent is higher. So in this population structure, the economic implication is that one, the first economic implication will be high taxation. High taxation. Now, what is taxation? Taxation is a levy, compulsory levy imposed by the government of a country on individual and on goods and services. Now, what it means is that those active population, those are the people working, so they will be taxed high because the dependent population cannot work, they can't be taxed. The retirement benefit of the retirement people can't be taxed. Okay, and also the children also are not eligible to pay tax, exactly direct tax as at that time. Okay, so what it means is that those working, which is the active population, will have to pay more tax in order to sustain these other persons. Okay, they will pay more tax, they will be taxed high by the government in order to get more revenue to provide essential amenities that will be used by what everybody, including the dependent population. Okay, so one of the economic implication of this population structure that requires that the dependent is more than the independent is that it will lead to what high taxation on the active population. Okay, now the second one is low savings. There will be low savings on the path of the active population. Why? They are the only ones working. Okay, so definitely they will have to get their funds to sustain the dependent population, which an individual, a man, for instance, working in a firm, can have both dependents. That is what depending on him. One, he might have a children, which is the children, the dependent population, one aspect of the dependent population, and also have an old parent, which is another aspect of the dependent population. So in that situation, he has to take care of the children and also his retired parents. So in that situation, his income, there will be low savings. He might not be able to save as required because he has to take care of the children and also take care of his retired parents. So one of the economic implications of this structure is that it will lead to low savings, because the income that comes to the active population from the individual perspective, they'll use it to take care of their dependents. Okay, the third one is that it will lead to low supply of labor. It will lead to low supply of labor. Now, low supply of labor in the sense that since it is the active population that is eligible to work, even in that active population, there are some persons that might not be willing and able to work. There are some persons that might be physically or mentally handicapped. So, since it is provided that it is just that active population, inside there are some persons that might not be eligible to work. Okay, so in that situation, now it leads to low supply of labor, because the working population, they are few. Okay, so that's the third one. And the fourth one is fall in standard of living. Fall in standard of living. Now, the standard of living is a level of economic well-being attained by an individual. Okay, now there will be fall in the standard of living because there is low savings. Okay, because once you have an income and you spend more than you save, definitely it can result in low level of living, low standard of living. Okay, so these are the four economic implications of the above population structure. So that is what that question requires. That's the number one question. Okay, now let's see the second question. The second question says to us the demand and supply equation, we've read that before, which is QD equals 65 minus 4P and QX equal 30 plus 3P. So if we give the demand function as QD equal 65 minus 4P and QX equal 30 plus 3P. Now they said where P is price in Naira, QD is quantity demanded and QX is quantity supply. Now we should calculate the what? A. We should calculate the what? The equilibrium price. Equilibrium, at equilibrium, the quantity demand and supply are the same, they are equal. Okay, now to calculate the equilibrium price is to equate both of them together and solve for P. So now we said at equilibrium, QD equal QX. That's a quantity demanded equal quantity supply. It's because equilibrium means a state of rest between two balances. That's when demand equates supply. So if quantity demanded equal quantity supply, what is quantity demanded? Look at the function given as 65 minus 4P equal what is quantity supply? 30 plus 3P. So if that is the case, now in this our aim is to get P, which is the equilibrium price. So at the equilibrium price, we have to make P the subject. So we have minus 4P here. Now this crosses over I thought, so minus 3P equal, this is 30 here. Now this crosses over I thought, so minus 65. Okay, so minus 4P minus 3P will give us minus 7P equal. Now 30 minus 65 will give us minus 35. Now our aim is to get P, which is the equilibrium price. So we have to eliminate minus 7. So in this, we'll divide both sides by minus 7. So if this cancels this, my P is equal to minus 35 divided by minus 7 will give us what? 5. So therefore, the equilibrium price is what? 5 Naira, because they said the price is in Naira. Okay, so that's the first question. Now the second question said the equilibrium quantity bought and sold. Equilibrium quantity bought and what? Sold. So the second one, they said equilibrium quantity bought and sold. Okay, so equilibrium quantity bought and sold. So it means we are going to substitute the value of P into the demand and the supply function. So now the quantity demand is 65 minus 4P, which is the equilibrium quantity bought because demand is the bought. So we have 65 minus 4. Where we see P, we place 5. That is 5 here. So we have 65 minus 4 times 5 is 20. So 65 minus 20 is equal to 45 Naira. Okay? 45 Naira. That's the quantity bought. Now also, quantity sold, quantity supply function is QS equal 30 plus 3P equal 30 plus 3. NYCP, I place what? 5. So I have 5 here. So I have 30 plus 3 times 5 is what? 15. 30 plus 15 is what? 45. So it shows they are the same. The quantity bought and supplied are the same when the price is what? 5 Naira. So that's the equilibrium quantity, 45 Naira. Okay. The third one, B, said use your answers in AI and II, that is AI and II, to AI and II above, show graphically the equilibrium point. So what they are saying is that we should use these answers we've gotten to show the equilibrium point graphically, to explain it graphically. So if we have a demand and supply curve like this is 0, and there's a quantity axis, okay, and this is the price axis. So if our price are in the range of 5 is 10, This is 15. Okay, 15 naira. And our quantity in the range of 20 is 20, is 40, is 60, is 80, and is 100. Okay, now, so from here now, let's draw the demand function, the demand line, demand curve. So when the price is 5, the quantity demanded is 45. Okay, so quantity demanded is 45. What is here? So it's showing this. Also, when the price is 5, quantity supply is 45. When price is 5, quantity supply function. So this is a quantity supply is a quantity demanded. Okay. Now this point is what we call the equilibrium point. Okay. So this is the point where the quantity demand and supply are the same. Please don't mind the graph, it's just a sketch. Just understand this. Okay. There's a point where the quantity demand and supply are what the same. And this is the equilibrium price, 5 naira. This is the equilibrium quantity, 45 units. Okay. So that's on that. So the next question said, explain 3 factors that affect supply. Okay, explain 3 factors that affect supply. Now we have different factors that affect supply. Now the first one, or one of it, is the price of the commodity. Okay, the price of the commodity. Now the price of the commodity is one of the factors that affect supply, in the sense that if the price of the commodity increases, the supply of the commodity by the producers, the supply of goods by the producer, will also what increase. Why? If it reduces, it also what reduce, following the law of what supply. Okay, so one of the factors that affect supply is the price of the what commodity. Another factor that affects supply is the government policy. Now, the government have a stake when it comes to the supply of commodity. Now, if the government endorses a policy that affects producer, definitely it will affect the supply of goods and services. For instance, is the high taxation. If there's high taxation that affects this the supplier, definitely it will increase their cost of production, which can ultimately reduce the number of goods they produce. Okay, so the government policy also is a factor that affects the supply of goods and services. Another factor that affects supply is technology. Technology is one of the factors that affect supply, in the sense that if there's advanced technology that ensure that most of the work done by manual labor are done by machines that can multiply the goods and services being produced per time, definitely it will increase the output being produced, which can also increase the supply of goods and services. But if there's low technology, it is the other way around. Okay, technology, advanced technology as per se, is also a factor that affects supply, because once there's machinery that helps in production of goods and services, it will definitely increase the supply of goods and services. Okay, so thank you for watching this. That's the 2 questions relating to the Neco 2022 question for the section A. Okay, so we're going to see other aspect of economics question. So I want to you like, comment, and subscribe to this channel. Now drop in the comment section below the aspect of economics you want me to touch, and you will see that. Okay, we're on Facebook, we're on Instagram, on TikTok, on YouTube. Please follow us on this platform, the same name, the King's Tutor. Just type on this platform the King's Tutor and you will see us there. Please like our video, comment, share. Let's reach other students. Okay, now there's a video I want to recommend for you to watch now on my YouTube channel. You'll see it there. Please watch it now. Thank you very much.